Welcome everybody to the SNN Network Australia virtual event. I'm your host, Robert Kraft, and I'm very pleased to bring you our next panel today. This panel is Learn About the ASX, Metals and Mining. And I'm very excited to have our moderator on board to help with this panel today. It is Gavin Wendt. He's a legend in the mining space in Australia, in general, but in Australia, he's Australian, so in Australia. And he is an analyst at Independent Investment Research, as well as editor at MineLife. And with that, Gavin, take it away.
Well, I'm delighted to be joined by three outstanding mining executives today, all of which I've had the pleasure of knowing for many years. These gentlemen represent nigh on a century's worth of combined resource sector experience, and so we are very privileged to have their valuable input into today's discussion. My guests today are Mark Wilson, Managing Director of Legend Mining, Andrew Spinks, Managing Director of EcoGraf, and Bill Guy, Managing Director of Theta Gold Mines. Gentlemen, thank you for joining us and welcome.
Thanks, Gavin.
Good morning.
Morning, Gavin.
Welcome. As an introductory comment, I must say that as an analyst that has followed the Australian resource sector for about 25 years, I can't recall a better time to be an up-and-coming ASX resource company. The Australian resource scene is undergoing a true renaissance. Our domestic junior mining index has doubled over the past 5 years, and we've seen a particularly strong environment for small companies throughout 2020, despite a whole range of challenges and uncertainties. When it comes to commodities, interest in precious metals, base metals, and battery materials is particularly strong indeed. Exciting grassroots discoveries are being made. Companies are able to raise cash to fund their activities, and the share prices of many quality junior companies have generated outstanding returns for investors, including the three companies that we have with us today. So without any further ado, let's bring our panelists into the discussion. Gentlemen, the last 12 months in particular has represented a wonderful window of opportunity for the Australian resource sector, which I think it's fair to say has coincided with strong progress in terms of all three of your respective projects. Can you provide an overview of what it's been like for you individually in terms of project advancement and overall market recognition? Mark, let's start with you.
Thanks, Gavin. The most remarkable thing about Legend's year is exploration success has been rewarded by market appreciation in share price. That's happy shareholders. And as I often say to people, of all the KPIs that I've got in my chair, the only one that matters to shareholders is share price. So it's been a pretty enjoyable ride for the past year. Just by way of a little introduction to Legend Mining for the listeners, we're a nickel exploration company. Nickel's a great metal to be in the world today. It's seen as a forward-looking metal. It's got the EV battery use as upside, and the nickel that we are finding is battery compatible. We've got a 3,000 square kilometre project in the Fraser Range area of Western Australia in a specific place called the Fraser Zone, which is about 20,000 square kilometres. And there are 4 known nickel occurrences within that Fraser Zone at the moment. 2 of those are on Legend's ground. This belt was first identified by the Canadian Geology Society in the 1960s, and they sent their best explorer Newmont out here looking for nickel in the 70s. Fast forward to 2012 when the first major discovery was made by a company called Sirius, and they went from a 10 million market cap to a 1.8 billion market cap in 3 years. And the company that took them over, IGO, is currently producing nickel at $1.60 a pound at that particular Nova project, selling into a market that's circa $7 a pound. They're all US dollar numbers too for the listeners. So you can see it's been a very value accretive proposition for serious shareholders. It's an enormously profitable operation for IGO, and Legend obviously aspires to emulate that performance.
Thanks very much, Mark, and we'll throw over to Andrew.
Thanks, Gavin, for the introduction, and that's a great overview of the market. Obviously, we're seeing unprecedented investment in Europe, seeing a transition to clean energy through e-mobility and energy storage. And I guess Australia has a significant role to play. Our company, EcoGraf, is positioned to be an integral part. We've developed over the last 8 years 3 key pillars of areas that we've developed. We've spent $35 million. We've founded on the development of a mine in East Africa, where we're pursuing debt financing through strong German government support and KfW IPEX Bank, which is Germany's largest state-owned bank. We're also, as a result of that development, we've gone downstream and we've developed our own purification process to manufacture battery graphite. The aspect that I guess the highlight of that development is we're looking to establish the first facility outside of China using a non-HF method. We're looking to establish our first facility in Western Australia here. The really interesting aspect more recently is we've been able to take our purification technology and apply it to recycling. And we've had some really encouraging results from the initial test work we've carried out on recovering black mass from recycled lithium-ion batteries. I guess the important aspect of our business and the Australian market is, you know, we're an integral part of the supply chain into this enormous growth. And our focus has been on European, Southeast Asia markets and the US. And the value proposition from those 3 developments is enormous. And I guess the other great thing we're seeing from the Australian markets is the more recent government support for these battery minerals and critical minerals development in Australia.
Fantastic, Andrew. We'll hand over to Bill now. Can you provide us with some context in terms of what 2020 has been like for you in terms of project advancement and overall market recognition?
Yeah, thanks, Gavin. So Theta Gold Mines has basically got about 6 million ounces under management at the moment. So obviously the gold price has been very strong. So the market's, you know, giving us value for that. We feel there's still a lot of exciting project and upside on the project. We currently own our own gold field. You know, if you look at us in terms of comparisons on the ASX, you know, we're currently the largest undeveloped gold resource that's not controlled by a major. If for our North American viewers, you can look at us in terms of Miners and Cardinal. They've both got about, 5 million ounces under management, and they've both capped at about $500 million. So we've already completed a feasibility study on our project. So we've got an EBITDA of about 20 million there. You know, the market's currently giving sort of 20 times X, in these buoyant times. 20 times X would give us a market valuation around $500 million US once we get that thing into production. And we're very close now. So we expect to be in production sort of 2021. And the guys down there are working very hard. And like I say, with the current market conditions, it's great to have it. We feel we're one of the nearest term development projects out there.
Fantastic. Thanks, Bill. I'd just also like to highlight for the benefit of viewers that all 3 of these companies have received strong market recognition in terms of share price performance. In the case of Legend Mining and Theta Gold, their share prices have trebled over the past 12 months, while EcoGraf has doubled. So all 3 companies have performed very, very strongly and received tremendous market recognition. We'll just move on to our next point, because what I find encouraging is that the ASX investors have been keen to embrace quality companies, whether their projects are located here in Australia or internationally. And I'd like to get the panelists' thoughts on this particular point. Mark, could we start with you, please?
Certainly, Gavin. And the interesting thing about Legend is our project before this was actually in an iron ore project in Cameroon, in West Africa. So, you know, we principally went there. I guess I've always had a philosophy that if you get involved in these junior exploration companies, try and identify a project that's got the potential to be a company maker and, you know, a needle changer. And when we came back from Cameroon, I had $16 million in my treasury. I had Mark Creasy as my major shareholder, and Sirius had just basically set the world alight with the Nova discovery. So what I quickly identified was another nickel project in the Fraser Range would be very compatible for that needle changer for Legend. We went about negotiating the purchase of that. And if you follow our progress, you mentioned just in the last year, Gav, but it's really across 5 years where we've gone from a 20 million market cap to the 350 we are today. Each one of those spikes has been off the back of exploration success, which we find as an executive team very rewarding to get that recognition. But if you go back to the Sirius story that I talked about in my introduction, you know, they finished at $1.8 billion with a 46 square kilometre land package. Legend's currently at $350 million. We've got a 3,000 square kilometre land package. And so the proposition I put to people is don't look backwards on the price appreciation that we've had. Look forward, and I think you'll find that there's a story that points upwards. Thanks, mate.
Thanks, Mark. Andrew, I think this particular topic is relevant to you because whilst you have a domestic, strong domestic presence in Western Australia, you also have had and still do have a very strong international project focus as well.
Yes, that's correct, and I guess our experience grows from Africa as well. We were founded on the discovery of Apanko, which we believe is still one of the best undeveloped graphite deposits, and our DNA evolved from that. Our initial market cap commenced at around $5 million. We currently sit at around 60 million, and I guess as a result of our strategy and business development, we've been able to go downstream and develop our purification to really develop the only look at developing a purified manufacturing facility outside of China. We're evolving into a company that is very innovative, and that's resulted in the development of the recycling business that I mentioned. And I guess the really attractive value proposition for our company is we're pursuing circa around 95 million US from German-backed government, from the largest state-owned, safest bank in the world, KfW, and also we've got strong funding support from the Australian government, and I guess that will result in significant growth for our company. And as we see demand for these battery minerals grow, we'll be able to scale our business up equally. So the value proposition as we stand now is just on the current demand, but there's huge growth as well in these three areas that we've developed.
Thanks, Andrew. So very strong international investor interest for what you're doing in terms of an ASX listed company. And Bill, I imagine you have a similar story, entirely 100% focused on South Africa, but in terms of share price appreciation, investor interest, you've done very, very well.
Yep, thanks, Gavin. I quite agree Mark, actually. So essentially, to me, it comes down to the quality of the asset. So if you think about that, well, we've got 6 million ounces of shallow gold. So, where do you find that asset and how would you replace it? To me, the international community will look at the asset before anything else, not so much about location. You think of in terms of South Africa produces 50% of the world's gold. So, it is a pretty good location. We've got probably one of the world's best geological settings for gold. But to me, it's a bit like, if you want our story, I think, is a little bit more like the Kirkland Lake story. So Kirkland Lake went down there to the Victorian goldfields, brought new ideas and new technology to a field no one wanted, even in Australia. They turned that into a modern day gold rush. And what we want to do down where we are here in South Africa was South Africa's first gold rush in 1873. And we'll do the same thing, bring new ideas, new technology, and bring the field back to life. So it's all ahead of us. Very exciting.
Wonderful. Thanks very much for your insights there, Bill. One of the other interesting points I'd like to raise is that I guess what I find encouraging is that ASX investors have been keen to support companies at varying stages of advancement, whether that happens to be a pure exploration play or a situation that's somewhat more advanced. What insights and advice can you share in this regard? Mark, we might start with you again.
And thanks, Gavin. Look, that aspect's really interesting in our business because, as I mentioned earlier, I came back from Cameroon with 16 million in cash, and I actually didn't need any funding for the first couple of years on the ground. And that was pretty important for our development because we were able to go and do a lot of broad brush moving loop and air core drilling to try and identify the areas where we thought were most prospective. And come 2018, we'd actually developed this coherent anomalous nickel copper air core anomaly at our Mawson prospect. But in 2019, the market was basically closed for funding for exploration companies. And what that forced me to do was actually identify a funding source which understood the value proposition of our project. And I had two people on the line for that. There was a Singapore group and IGO. And when I mentioned that the funding was being done at a 20% premium to our share price, Singapore group gone in a heartbeat. The only one left was IGO. And so that was where I raised $10 million from one source. It's important when you're in these sort of projects to have sticky money, money that understands and stays. And with that money, we basically made the discovery holes at Mawson in December of 2019 and March of 2020. And following that, in 2020, the market has been amazingly receptive to all sorts of capital raises. And it was in that environment that we were able to do the raise in June this year of $20 million, which has set us up with the 30 million treasury we have today. And given that we're spending about 12 million a year, we're, in an amazingly secure position, which, to be quite candid, in the whole time I've been involved in this game, I've never had such a war chest in which to prosecute my dreams.
That's very encouraging, Mark. Wonderful to hear. Andrew, could we get your particular insights on this?
Yes, absolutely. I guess the success of our capital raisings have really come from the strong shareholder support, and we've been very fortunate to have secured the support of Mitsubishi Financial Group. They're our largest shareholder, and having a strong institution like that supporting our capital raises, along with, you know, strong ownership, 10% of our companies owned by management and the board, provides, you know, a consistent ability to raise capital on the way through. It's been a long journey for us. We've been at this 8 years. As I said at the beginning, we've spent $35 million. And I guess the other point I'd like to make is I think the R&D through Oz Industry is spectacular in Australia. I think it's a much better system than the North American flow through scheme, which, you know, the money is returned to the shareholder, where the money comes back to us. And without that R&D Oz Industry, it's unlikely that we would have been able to pursue the innovation of the purification process, and also, you know, start looking at recycling, which is going to be a critical, important industry in the future. And I guess finally, just it's really great to see the federal government now supporting battery and critical minerals. The establishment of the Critical Minerals Office, headed up by Jessica Robinson, is just really great for Australia to, you know, capture the value capture of value adding and of these battery minerals, nickel, graphite, cobalt. You know, manufacturing downstream in Australia is something that we really need to focus on, and I think it's going to be a significant industry in the future.
I think it's an important point that you make, Andrew. From an investor perspective, you know, we're just discussing on this particular topic about investor appetite for exploration stories as well as more advanced situations. I think investors can see that there are now tangible things being done. It's not just a concept. Government, particularly in Western Australia, are becoming more involved in terms of dollars and incentives, and there will be an industry developed in Western Australia. And I think that's particularly significant to this whole discussion. Bill, we'll come to you now. I mean, obviously you don't have a grassroots exploration situation. You've got a multi-million ounce resource, but what are your insights in terms of the ASX and investor appeal?
So over the last 5 years, Theta's raised about $40 million. And to me, it's about a systematic approach, because you've got to keep going back to the market for more and more capital. So, you know, the investing community wants to share that journey with you and see what you do with that money. You know, we started off with drilling, just an exploration project. We got some high-grade drill results here in 2018, about, you know, over 100 grams. We come out with initial resource. We moved to a scoping study, but for us, the big one was the completion of the feasibility study in 2019. Then we really gained some traction with the market. The market was starting to really stand up and look at us seriously and see that we're serious players. We delivered a mill to site, which was also, you know, good for our credentials. We completed an optimization study, and really for us, it's been a step-by-step growth pattern. So, you know, over the last, like Gavin said at the beginning of this thing, we've tripled over the last couple of years. You know, it's been a great result for the shareholders, and anyone who's put money in, we've always raised money again at higher prices. So it's been a great result for the investors as well.
Thanks very much for your insights there, Bill. To a large degree, we've already covered off on my next topic, which was, I guess, junior company access to funding. I'd like to touch upon your experience in terms of raising the exploration funds necessary to do the job. I guess in the context of the Aussie market, we've had a significant advantage over perhaps the past decade. If we compare ourselves to South Africa, for example, which hasn't had typically a strong junior sector, even places like Canada, which have in the past supported junior companies, until recently, that market has been closed off for junior resource funding, I think it's fair to say. How would you contrast your experiences on the ASX over, say, the last 5 years, not just this year, but over the past 5 years, say, to some of the experiences that some of your peers might have had, international peers might have had, being listed on foreign exchanges? Have there been advantages from your perspective? Mark, if we could start with you.
Yeah, Gav, I think, you know, this year in particular is probably, when you talk about international versus Australia, it probably brings in the fact that COVID-19 has been the dominant factor in this year. And, you know, just speaking from a West Australian perspective, because mining was identified by the state government as a critical industry, and exploration was included in that category of critical industry. And my project is 1,000 kilometres east of Perth. And traditionally we would fly to Kalgoorlie, which is the first 600, and then drive the last 400 to get to our project area. But the government actually had in law regional barriers for travel between regions, just as a technique to try and contain any COVID outbreak that may occur. But we were able to get paper, which was basically an interstate passport, so that at these different checkpoints as our team travelled through the region, air travel was off, but we could still get our teams driving from Perth to site and back, even during the darkest moments of COVID in March, April this year. I'm not quite sure how others in international areas dealt with it, but even within Australia, Western Australia, I think, is the envy of most Australian states because of the way we've dealt with COVID and the way our industry has stayed open. I think the big iron ore miners, with the price increase and the demand from China, have led the way. The royalties have been flowing, and apart from a short 6-week lockdown in the city, most of us have been going to our offices and able to enjoy life and progress our projects, more importantly, in a timely manner. Although I sort of relate it as a bit like driving with a handbrake on. You could still drive, but you had a bit of a stopper for a short period of time.
Fantastic insights, Mark. Andrew, you're based in Perth along with Mark. Would you concur with his thoughts?
Yeah, no, I agree, absolutely. COVID-19 has resulted in, you know, I guess for us, you know, a really tightening in expenditure and managing the cash flow a lot tighter, given the uncertainty when we're in March, April, May. We didn't know where this was going to end, and I guess a lot of companies have tightened their expenditure. I guess we've found our funding, you know, obviously being a mineral cyclic, but I guess battery minerals are industrial minerals, and there's a little bit more. There's not the boom bust you see in typical base metals, so the funding's been a little bit more consistent. And I guess where we're headed to now, I think COVID-19 has really shown the importance for opening up new supply lines outside of China. The reliance on China is very topical at the moment, and the government is supporting this development of new supply. And the recognition of battery minerals like nickel, graphite, lithium, and cobalt needs to be, you know, is highlighted by the investment going on by the government and industry at the moment.
Fantastic, thanks, Andrew. Bill, you're on the east coast of Australia, like me, in Sydney. What are your thoughts?
On the funding or COVID? I guess just to briefly touch on the funding for a second. You know, we've had a pretty good run with the funding. Effectively, as the project develops and gets closer to production, we find funding's a little bit easier every time. And there's also a lot more funding options. As you complete that feasibility study, you know, you can look at project financing, look at all sorts of other things. But in terms of COVID, for me, it was really South Africa did a pretty good job there. In reality, they locked down the country very tightly to begin with through a multi-stage process. But what we were able to do during that whole process, we ran 15 consultants and they basically ran it from home. We had no sort of, let's call them hard issues. Most of the issues were soft, so we were able to progress our project very effectively. Silver Prozo there in South Africa did a good job in containing COVID and getting on top of it. And now post-COVID, South Africa is looking to lead the economic uplift through by supporting their mining industry. So they see it as the mining as the post-COVID solution. So that's sort of great news for us as well, that, you know, South Africa is getting back into the mining business again, making life a little bit easier for us. Here in Sydney, we were locked down pretty tight, to be honest, doing a lot of Zoom meetings, not catching the train too much. It was pretty restrictive, but fortunately for me, I actually landed about a week from New York before COVID actually hit. So if I'd been 5 days later, they would have locked me up for 14 days. So I was pretty lucky.
Thanks for your insights there, Bill. Look, just moving on to another point, because your companies are quite different. Each of your companies are quite different in terms of your commodity exposure. Mark, in the case of Legend, nickel exposure primarily. Andrew, in the case of EcoGraf, graphite. And Bill, in the case of Theta Gold. What has been your experience in terms of investor appetite based on your commodity exposure on the ASX? Mark, we might start with you if that's okay.
Thanks, Gavin. Nickel has, you know, had an amazing resurgence of awareness, if I can put it that way, on the ASX in particular. And I think, you know, you go right to the top to BHP with Rio, one of our two largest mining companies. And the chief executive from the get-go this year has been focusing on BHP's nickel contribution as a forward-looking metal. And I'm sure every listener across the globe is aware of the ESG implications to the mining industry, the E being environmental and the S being social. And green mining is a terribly important criteria for individuals and fund managers to get across that hurdle before they will actually invest in your company. And so nickel has progressively just market awareness that especially the nickel that we are producing or we're not producing, but we're looking for to produce, the nickel sulfide, is a battery compatible type of nickel. The global nickel market is really dominated by Indonesia. And Andrew made a comment before about the boom and bust in base metals, and he's quite right in his comment. But nickel's a very interesting one because 70% of the world's nickel use is in stainless steel. And so you've got this underlying demand whilst China keeps consuming and the GDP in China keeps going. You've got this underlying demand for stainless steel and the underlying demand for nickel. But the excitement in nickel is about the electric vehicle battery space. And when you look at some of the projections of the nickel usage in that going out to 2025, respected analysts across the world are talking about the sky is the limit for nickel. And so I'm a pretty basic guy, Gavin, as you know, and I always like to go back to the barbecue analogy of the sausage and the sizzle. And to me, the stainless steel use in nickel is the sausage, but the EV battery use is the sizzle, which has got the interest in nickel in our marketplace today.
Thanks, Mark. A great analogy. Andrew, over to you.
Yeah, no, they're great comments by Mark. And I guess further to those, Australia's in a great position. The importance of transparent, ethical sourcing of raw materials couldn't position Australia explorers and developers in a better position. We're going to see a massive shift of this style of sourcing of materials become more and more important. I don't think you can go on to any end consumer now that is not talking about the importance of ESG and the environmental and social governance is becoming such a critical aspect. And I guess we've seen that, we've seen that through the beginnings of blood diamonds and cobalt being mined in the Congo by, being highlighted. What we're going to see now, and we're just at the foothills of a massive surge in battery minerals for this enormous growth in the transition to clean energy, is going to require Australian processing, Australian mining know-how, and Australia's reputation. And I think, for all our companies, it's a great position for nickel and graphite. Although I'd like to have a pocket full of gold as well with the gold price, but in terms of battery minerals and the reputation and ethical transparency, it's just getting stronger. The World Bank just put out a report a few months ago talking about the importance of it, and their forecast projections are accurate. I don't think you can overlook what is going on in investment in Europe, the US, and I guess if Biden gets in, which it's on the looks like it's that way, is going to be very supportive of EVs. Gas guzzling US is going to transition to battery technology and energy storage.
Thanks, Andrew. And on the gold theme, Bill, I'm sure you've got a lot to say in terms of investor interest. Strong gold price, that doesn't look like changing anytime soon.
No, we're at Theta, we're gold bulls. We've been really enjoying the strong gold price. With a very large undeveloped asset here, people are starting to talk about peak gold now, and that we're past that sort of zone. There hasn't been many tier 1 discoveries in recent years. Obviously, we've had a bit of good news out of Western Australia, but it was nearly 10 years before all this good news started coming out. For me, I think the really story that people aren't really talking about is the China story. China has a very low proportion of its reserve currency in gold. So now China has ramped up its production to become the #1 producer of gold in the world, but you can't buy a gram out of China. All that gold stays in China. So we're not talking about that yet. Those discovery costs are climbing all the time for gold. It's about $45 US now. Some people talk up towards 100. So, when you see those discovery costs climbing still, you see the world printing money. You hear Rick Rule on the TV over there in the US always giving a very good analogy of gold. It says it'll be a wild ride, but, generally the price is going up. And, we saw Russia about 10 years, over 5-6 years ago, really increase their gold content and in terms of reserve currency as well. The US is still the largest holder of gold per ton, in ton terms, but in currency terms, it's one of the lowest holders. So we really see COVID really rattling the cage here in terms of how much reserve currency is going to be kept in gold.
Absolutely. And one would imagine, irrespective of the US election outcome, the circumstances over the next 4 years are going to be hugely supportive for gold based on ongoing uncertainty, one would think.
Well, the more money they print, what choices the world got? They've got to print more money now. So
absolutely. Gentlemen, I'd like to finish off with a couple of broader range questions. The first one is, I guess one of the key aspects of the ASX is that resources historically has always been a key component. It's not surprising given the important role that mining has played in the Australian economy. But in addition to the presence of the heavyweight miners such as BHP and Rio Tinto, juniors have always had a vital role to play. And that's a situation that continues to this day. I guess I'd like your thoughts on how this is reflected in terms of investor interest in your companies. I mean, is there a discrepancy? Do investors, particularly overseas investors, understand the difference between mining and exploration, for example? Mark, if we could get your thoughts first off.
Gavin, I've run into some interesting circumstances, especially in Asia and to a lesser extent in Africa, where I would say that there isn't. Exploration is not well understood in terms of the concept of, you're going to take my money and you're going to drill a hole and you don't know what's in there, you can't be for real. And versus the Australian market and the Canadian market, the small experience I've had in Canada, there's a very clear understanding of what exploration risk and exploration reward is. And I think to your point about the relevance of mining on the Australian Stock Exchange, yes, we have the heavyweights who are just terribly attractive investment destinations for conservative money in this very low interest environment. I think none of us touched on interest rates, and it's pertinent to gold, but it's pertinent to all commodities. And as money's printed, people have to have a place to put their dough. And one of the places is commodities. And you've just seen this rising tide of commodities led by gold across the whole suite. And I think certainly well understood in the Australian market is most major discoveries are made by juniors. Juniors are seen as a lot more nimble. They're seen as a lot more cost effective. And by that, I mean, if I spend $1, at least 80 cents of every dollar I spend directly goes into the ground. I would venture to say if you're one of the majors, if you got 50 cents in the dollar into the ground, you'd be clapping like the proverbial seal. So with that goes the risk reward, and investors are about returns, and that hockey stick curve, which I suspect Bill's got in his company, where he's gone from a discovery hole through to that feasibility study, that's where tremendous value is created. And investment in the junior space in the Australian Stock Exchange gives you exposure to that sort of growth.
Thanks, Mark. Your thoughts, Andrew?
Look, Australia's got a great reputation on success of exploration and value from junior companies going up through major companies. I guess our experience has been, as we've evolved through the success of our initial exploration success, shareholders have been rewarded, and shareholders are adaptive. You know, there's a certain percentage that will move on and will get new shareholders. So I think there's a lot of opportunity as you grow and develop the company from exploration success. Your shareholder will change and migrate. And I guess our experience is such that, and I guess, you know, what we've got as a value proposition from the company is significant across a broad range of developments, from recycling through to mining and technology. And I guess at the appropriate time, we'll look at you know, potentially separating those value propositions, because you know, they don't mix. They need to be separated at some point in time. But when it's a value and positive for the company. But look, the Australian market is a great platform to enjoy success from exploration through to greater things. And you know, our company EcoGraf is a great example.
Thanks, Andrew. And Bill, you don't have to be have a domestic company with a domestic project to enjoy that ASX investor support, do you?
No, we've had a great run there, but I sort of want to echo sort of Mark's sentiments actually. In terms of understanding, it's really Australia and Canada for exploration. They have a really good grasp and concept of it. You know, if you're pre-production, you can go to London or the US, but it's really, those are the two primary markets of support. We've got a lot of money out of Asia, don't get me wrong, but I think it's a much easier process. The Australian investors really do understand exploration, junior explorers. And, you know, what do the junior explorers do for the market? They provide a lot of excitement. You know, the assets get revalued very quickly. Mike says you get those exciting curves. You know, BHP and Rio Tinto, the big boys, what they do, they consume us, you know, which is also exciting time. You look at Cardinal, its value was less than sort of around the $100 million mark. Then, you know, we've had Shandong and Norgold fighting over it. Now it's capped at $500 million, you know, and that's been a very exciting time for those shareholders. So, you know, junior explorers not only provide the discoveries, they also provide food for the majors. And also in terms of investor profile, you know, you also get the investors wants his conservative component to his portfolio. But for me, you know, you also got the guy who wants a 10 bagger as well. And that's what the junior explorer market does in Australia. It provides those opportunities for those 10 baggers that everyone wants to say they were part of. They saw it coming before everyone else.
Thanks, Bill. We're rapidly running out of time, so I'd just like to ask one final question. And again, this is a broad brush sort of question. I think it's fair to say 10 to 15 years ago, there was a move away from more mature mining destinations like Australia, North America, South Africa. There was a perception that the grass was greener in terms of exploration elsewhere, and that all of the low-hanging fruit had already been picked. What we've seen in particular over recent years is that there have been fantastic discoveries made in what was previously considered to be more mature parts of the world from an exploration perspective. Mark, I'd like to get your thoughts on this particular topic as we sign off. Australia is still a great place to be.
Thanks, Gavin. Yes, look, it's really about funding windows. When I first got involved in Legend, it was a bit in a tricky space. And looking for projects which, going back to my earlier comments, could move the needle, it was really difficult in the late noughties, you know, 2008, 2009, to find those projects in Australia because they were all locked up. That took me to Cameroon, which is exactly the point you make, because I identified a project there that had the scale. You had the iron ore price going off its head, and Sundance had a very exciting looking project inland. But from that time on, funding really dried up for exploration companies. And it was that contraction of funding which opened up the new opportunities when I exited Cameroon and came back to Australia in 2014, 2015. Luckily, I had the cash, so I didn't need the market to support me. And that gave me the ticket to acquire off Creasy this project, and the rest is history.
Wonderful. Thanks, Mark, for those insights. Andrew?
I guess can't talk directly around exploration because we're focused on the downstream development in West Australia. I guess what we have experienced is we've explored Asian locations for locating our facility in our first facility, and we've decided to locate it in West Australia. And I think that's been founded on the movement to this demand for diversification of supply. And I think that positions Australia incredibly well for potential future discoveries of minerals in Australia to value add. So yeah, I guess that's the comment I'd like to make, Gavin.
Thanks, Andrew. And finally, Bill, I don't think it's unfair to say that a few years ago it might have been a bit of a challenge to generate interest in a South African gold project, even a multi-million ounce one, but investor perceptions have changed.
Yeah, I think you've got a new government over there, which is obviously helping. Cyril Ramaphosa was actually the chosen one from Mance Mandela. He wanted him to be president next. And the good thing about Cyril, he was already a billionaire nearly by the time he became president. So he's not doing it for the money. He's already got lots of money. He brought McDonald's to South Africa. He's been a miner. And the thing I like about the current sort of arrangement over there is that the minister was also an underground miner. So they understand mining very well. But I am an explorationist at heart, so I'd like to say something. I've worked all around the world, so, I've spent a lot of time in Western Australia. I think it's a great jurisdiction. And I think, to see these new round of discoveries is very exciting. And I think it comes from a level of detail in a way as well. You've got a massive amount of government support there in Western Australia and knowledge, which I think is fantastic. But when I travel around the world, I don't see that other places. When people say, oh, South Africa is this or it's that, I don't think South Africa's hardly been explored, particularly in our area. South Africans are fantastic miners. They can mine anything. If you give them, say, go down that hole and come back with a gold bar, they'll go down the hole and they'll come back. They love being underground. But in terms of exploration, only really Australia and Canada are really, I think, are so far in front. And that's what we have to bring as Australians to South Africa, is that real expertise in terms of exploration and knowledge. You know, since I've been with the project, we've taken it from 3 million to 6 million. And I'd be very disappointed there's not a lot more here. When we put in 3D now and we start to, it's pretty, you know, imagine a 150-year-old goldfield that's never really been in a proper GIS package, is how, so to me, it's how far behind it is. You know, when you see this thing in 3D, you know, it's just a monster. So, and I look at what's been done, there's hardly very little soil sampling. There's really very little drilling in terms of what we would do. And like Mark said, you know, we take a drill on, we take a chance, but most markets won't do that. And we haven't really had that round of exploration in South Africa yet. Yes, they've gone deeper and deeper down into the widths and they've followed it all the way down because they're great engineers and great miners, but I don't really perceive them as great explorers.
Thanks very much, Bill, for those insights. Well, gentlemen, it's been a fabulous discussion and we've covered a lot of ground. And I believe we've helped provide a valuable overview of the Australian resource scene, particularly from an ASX perspective. Look, I'd like to thank you all very much for your time and for your input into today's discussion. Thanks very much, Mark. Thanks very much, Andrew, and thanks very much, Bill.
Thanks, Gavin.
Thanks, Gavin. It's been a pleasure.
Yeah. Thank you, Gavin. Well done.
Yeah, well
thank you.
Run, Gavin. Thank you.
Thank you
thank
all.
you everyone for watching.
Yes, thank you all so much. And before I let everybody go today, you know, I'd love it if we could get everybody's website for more information where our audience can go and find you. So Mark, let's start with you.
www.legendmining.com.au.
Very good. Bill?
www.thetagoldmines.com.
Very good. Andrew?
www.ecograf.com.au.
Very good. And Gavin, close us out.
www.minelife.com.au.
And also www.independentinvestmentresearch.com.au. Correct?
Correct.
Very good. All right. Well, thank you, gentlemen, again for joining us, and look forward to speaking again soon.
Okay.
Thanks, gents.
Thank you.
Thanks very much.
Thanks, Gavin.